All right, so I've got some tariff news to really explain on how things are working in the market. So first of all, we had rates improve midweek. Then Thursday, the prelim deal with the UK was announced as far as how the tariffs are going to look, and bonds did not like it at all. The stock market did, but bonds did not. And then we had a relatively flat Friday of trading, so rates pretty much ended the week where they started when it looked like it was going to get a lot better. Now, before I explain the tariffs, next week we do have a very key report. As I've been mentioning, the markets have been trading more on data. Again, the consumer price index comes out on Wednesday. We are looking for less than 0.3% in the core numbers. If so, that should be helpful for rates. But let me talk a little bit more about this broader scope of tariffs and what happened with this week and the negative reaction to the bond market. So the 10% tariff is put in place for England, or it's going to be in the final ratification of the agreement. And what that's signaling to the markets is like there's definitely going to be tariffs. As I've told you before, inflation is the arch enemy of any fixed rate instrument. It means prices are going to go up. If there's a tariff in place, things will cost more. It also signaled to the markets that there is some room for flexibility and for negotiation on this. And so because of that, the markets were like, well, gosh, we're going to have tariffs. Things are going to cost more. But on the other side of that, we also have the tariffs may not be as bad as expected. And so that means that we're still going to have growth. And so you kind of have this double-edged sword. It's like, well, things are going to cost more, but we're still going to have growth, which means the Fed really can't lower interest rates, because if we're growing and things are costing more and then they cut rates, it only adds fuel to the fire to stoke the inflation flames even more. So that's what's going on. Now, again, if we get drastically less inflation numbers, we're still going to benefit. Rates will come down, and that's why next Wednesday's consumer price index is a big deal. I hope you found this valuable. If you did and you learned something, holler back at me and let me know, please. Peace out.